What's going on, YouTube? My name is GT, and if you're new to this channel, we provide meaningful information around fitness and finances through interesting conversations like the one we're going to have today. Let's get right into it. As a lot of us are here learning about what's going on in the market, wanting an interest on how to invest and what we should be doing to get ready for our financial futures, I want to provide a video to you today to explain to you why we believe everybody watching and listening to this video needs to open their own IRA. I'm gonna go into the full details of what an IRA is, things you can do to take advantage of it, and how you can use that vehicle to help you make life-changing generational wealth. So let's start right with the beginning. IRA, when you hear the term IRA, what does it stand for? IRA stands for Individual Retirement Account. And so the idea of it is a way for anybody to be able to put money towards their ultimate retirement account. Not every job provides you 401k, 403b, pension, etc. And so through the IRA, this gives you the ability to control your financial destiny in the future through putting money through this designated account. Now, with that, do you get the ability to put all the money that you want into it? No, there are limitations by year that the government allows you to put into what's called contribute to your IRA. Okay, so for 2025, the contribution limits for folks that are under, I think it's 55 and a half or 53, is $7,000. So you can put up to $7,000 this year into an IRA account. Now, there are two different IRAs. You have the traditional IRA, and then you have the Roth IRA. What's the difference? The traditional IRA is money you're contributing to the retirement account pre-tax. So all of us that work and have jobs, whether you're W-2, 1099, etc., we all are paid, and the money we have is one number. But then following that, especially if you're like a W-2 employee, they take away Medicare, FICA, Social Security, etc., etc. And so by the time the money comes out, we have a less amount available to us, which is our net payout. What an IRA does is it allows you, traditional IRA, allows you to contribute to the fund before the taxes comes out. Why is that important? Well, there are a lot of dollars that are being removed from your paychecks now, but this allows you to put a large chunk portion before the taxes come out in a traditional IRA. Now, another benefit is that with a traditional IRA, this allows you to reduce your reportable income as to your income tax return. So when you go in and you file your income taxes, all the money you've been contributing to this IRA reduces your taxable income, which could lower your income tax bracket, which in the front end allows you to have a potential greater tax return. The only detail that's important with the traditional IRA is that at the end, come 59 and a half, now you have to take the money and pay taxes back to the government because you've never paid taxes because you've been putting money in before taxes. But now the detail is based off of your income bracket at the time. So if you're making this amount when you open the account, but now you're making this amount, your income tax bracket has changed. And now you would be withdrawing money from your income tax money once you're 59 and a half at least at that income tax bracket for all the money that's in there. So that's the only detail with the traditional IRA that you have to keep in mind. Again, is it better or worse? You have to make your own financial decisions, but that's a detail that's worth knowing. Let's go back now towards the Roth IRA. The Roth IRA is money that you contribute to the IRA after tax dollars. So they take out Social Security, Medicare, FICA, all these other ones, and the money you put in, which seems a little bit less along the way, is what goes into the funds. Now, because it's after tax dollars, you cannot reuse that to reduce your reportable income. So it has no impact on your income tax return in the sense of reducing reportable taxable income. No impact with the Roth IRA. However, once it gets to 59 and a half at least, and you want to take money out of the Roth IRA, the one benefit you get is that regardless of how much money's in there, how much gains you have made, all of the money you withdraw from there is tax free because you've already paid the taxes along the way. So you can just grab and go enjoy life because you've already paid the tax along the way. Again, not better or not worse. It's just a matter of what's your preference. Do you want to pay the taxes now or later? Most people that we come across in our financial community, we recommend the Roth IRA because more often than not, your income you're making today is the least amount of income you're going to make in your lifetime. And so later on, as you level up, you will be going through different income tax brackets. So it's better you pay the taxes now along the way. Now, aside from that, why else should you have a Roth IRA? One thing that's differing from a 401k than a Roth IRA is that with the 401k, there is usually, unless you're doing it yourself, there's usually somebody who's managing your 401k account. Okay, that's called a plan manager. Okay, usually it's a financial advisor that's working with your job and your company, and they're the ones that are putting you in and out of different things, managing your funds, buying and selling as you go based off of your risk tolerance. Are you conservative? Are you aggressive? Are you moderate, etc.? They're managing your funds. And so through that, they are in full control of that. And then, of course, they have to report how your account has performed. So, you may get a report saying that, okay, this year, we made you 18% on your 401k. It's a really great year. Maybe another year, we only made you 3%. Or this year, we were a little bit under and you were negative 2% because the market had significant downturns. Okay. So they would manage those funds. Okay. And in return, you're paying fees for them to manage your fund. So you may ask, okay, so then why would I want to get into a 401k if somebody else is managing my money and I'm having to pay fees for them to manage my money? The biggest reason is because remember, with the IRA, you can only put up to $7,000 this year in 2025 towards that fund. But is that all you want to put towards retirement? $7,000? What if you wanted to put 10? What if you wanted to put 15? What if you wanted to put 20? The 401k allows you to put in 2025 up to $22,500 towards the fund. So it gives you more of a bucket that you can use to contribute towards your retirement. So there's a benefit for the 401k. But the detail that's most important, why the IRA is the game changer in comparison to the 401k, is that the Roth IRA, you are in complete control of what you are investing into in that account. So with the Roth IRA, you can build out your portfolio however you want it to look. If you want it to get fully aggressive, so that you want to put it in different things, we have a lot of stocks that we've talked about on this page, and I'm going to leave you with one for sticking around this long, which, by the way, I'm going to take a quick station break. If you have not hit the like button, be sure to hit the like button, share this with somebody you know. And then if you stick around, I'm going to give you, at the end, I'm going to give you a stock worth putting on your radar that we are heavily investing into that could make you exponential gains in your Roth IRA portfolio that you're going to start building out for yourself. Let's go right back to it. So with the Roth IRA, you can put in full control how you want to do it, whether you want to invest into some tech companies, whether you want to invest into some banks, whether you want to invest into some international companies, whether you want to leave it in cash, right? So that's another thing, right? It's a pro tip. Let's say you're conservative and the market is showing some cracks, but you want to contribute to your Roth IRA to make, take advantage of the money you can put towards retirement, but you don't want to put it at risk. You can still take advantage of the contributions you put in the Roth IRA without necessarily having to invest it into the market. You see, you can put it into the fund and leave it at cash. At cash, it doesn't make or lose you any money, but you still get credit for the contributions towards the account. So as a pro tip for anybody that wants to put money into an IRA, but don't necessarily are ready or are right now looking to put money into risk, you can just simply fund the Roth IRA with the $7,000 as you wait for an appropriate time to get in. In addition to that, with your Roth IRA, you can buy stocks, You can short the market. You can do stock options. There's so many different things you can do that can give you the ability to accelerate your account at whatever pace you're ultimately wanting to move that account. Perhaps you have a 401k that you've just been contributing to consistently, but with this Roth IRA, you may be hearing of an investment opportunity, a stock option, maybe shorting the market, all these other details. You can use that to take a little more risk and with more aggression, and can be now an enhanced buffer towards your financial portfolio. Now, to leave you with this, for sticking around this long, and because I like the value that we provide on this page for your fitness and financial journey, I'm going to leave you with 2 stocks that I'm going to put on your radar as a homework to consider putting towards your Roth IRA. So homework number 1 is that if you're listening to this and you don't have an IRA account, I would encourage you to take action and look into opening a Roth IRA account or a traditional IRA account you're choosing, and do that following this page. And if you have any questions, concerns, or where you should open one, comment below and we'll be sure to connect with you to give you some guidance. Now, once you open the account, here are 2 stocks I will tell you to put on your radar to consider adding to your portfolio right now, as we see this as a great entry. Number 1 is AMD, Advanced Micro Devices, ticker symbol AMD. That is a stock that has been heavily beaten down over the last 12, 13 months. But we are seeing now that it has caught a bottom and it is working its way back up. It is currently right now $96. And at its previous high, it got up to as high as $220 on its last run. So from here back to there, if it gets there at the minimum, that is over a 100% gain from here. So clear room to run. The second one to put on your radar is ticker symbol BIDU, the company Baidu, the Chinese tech company. We love the action right now in Baidu. We've seen Alibaba make a run and get all the way back to as high as $150. And this company is just as strong as Baba and hasn't made its run yet. It's currently right now $91. And we can see Baidu clearly getting to at least $145 from here. That is almost a 50% gain from here if you start accumulating. So you simply just start buying these shares. If you want to get into it, again, it's not financial advice. However, this is a strategy that we're doing in our financial community. And you can start accumulating these 2 companies consistently into your Roth IRA. And if you pick specifically a Roth IRA, if you contribute to there, then later on, when the gains start coming in and you're 59.5 and you've made life-changing money, taxes won't have to be paid. If you want to go the traditional route, you can take advantage of this now, reduce your reportable income in your taxes. Just be ready that come 59.5, you will have to pay those taxes later on. If you have any other questions, feel free to reach out. Be sure to like this video, share this with somebody you know, and we'll see you on the next one.